Good day, everyone. Stephen Stewart here, and I am very pleased to present something brand new. It's called XXIX, which of course stands for 29, which of course is the atomic number for copper. And that's what this new company, it's a merger between QC Copper and Cuprum. QC Copper, of course, owns the Opemiska, 100% outright. It is Canada's highest grade open pit copper deposit. And Cuprum, which is a private company and owns the Thierry, which is in Pickle Lake, Ontario, on the rail and the road, just like Opemiska, and it owns 100% of the largest copper resource in Ontario. And so what XXIX is, it's a business combination, bringing these two very large, high-grade copper deposits together under one roof to attract attention, lower our cost of capital, build scale, give us a dual asset strategy, and take advantage of what we see is a run in the markets over the next number of years. This isn't a short-term play. This is a long-term, but we're going to build value by gaining scale and having a very clear development plan for each of those two assets, the Opemiska and the Thierry. So for those who are new to the story, a little bit about us. I'm the chair of the OR Group. It's a private company that has been successful in creating special situation opportunities, RTOs, capitals. Effectively, we are resource entrepreneurs. We're based out of Toronto. Our successes, most recent successes, would include companies like Owale, where we are the largest shareholder, in American Eagle, where we are the largest shareholder and responsible for discovery and turning those two companies around. And we've done other things around. Our group together has been around for about 15 years, and we're long-term investors, shareholders, and owners. We treat each of our companies like we own them, even though we are acting on behalf of our shareholders. So again, going back to what we're talking about today's brand new announcement, the formation of XXIX. It's a business combination between QC Copper and Gold, a public company, and is acquiring Cuprum, a private company of which QC Copper is an existing shareholder, but it will aim to own 100% of Cuprum, and it will own 100% of both those assets. And so again, just to highlight, and I'll run through this in more detail, but the Opemiska is the highest grade open pit deposit in Canada, with access to wonderful infrastructure. In fact, I'll say unparalleled infrastructure. The Thierry, which is Cuprum's flagship asset, is in Pickle Lake, Ontario, again on the railroad, access to power, mature mining district, again unparalleled access to infrastructure, and it is a very large underground and open pit copper deposit with huge growth potential. We'll be designing and implementing a widespread drill program throughout 2025 on Thierry to delineate this open pit resource and produce an updated and consolidated resource. The company as is, once the merger is complete, will have almost 5 billion pounds of copper equivalent in Eastern Canada. It will be by far the largest owner of copper resource in Eastern Canada, and will be the largest developer, certainly amongst the juniors. It will have $8 million in working capital and significant organic growth potential. Both Opemiska and Thierry have growth ahead of them through drill programs, and obviously each will drive towards the pre-feasibility study, and that's part of our development plans, and both have to have PEAs in advance of that. But really where the rubber hits the road is producing the PFS, pre-feasibilities, and we'll show you our path to get there, and that's when these companies really re-rate. So I think part of the argument is scale. I think to have nearly 5 billion pounds in all categories of the resource under one company gives us scale. It focuses attention on XXIX, run by high quality people who are owners of the project. You can see there we're located in Thierry's in Pickle Lake, and of course Opemiska is in Chapet-Chibougamau. Mature mining districts, that's always been our focus. Access to infrastructure allows us to put more steel into the ground at a very low cost. We don't deal with helicopters, and access is easy. Mature mining districts, everybody understands the mining culture in the area. And then, of course, when the decision comes to develop and build these things, the CapEx is much much easier to digest than some of the other big deposits out west, which have multi-decade and multi-billion-dollar capex. And of course, I note the infrastructure, which is so critical when you're talking about copper deposits. The history of these assets, both Thierry and Opemiska, are brownfields and past producers, and both of them sent their concentrate via rail to the Horn smelter, which is just about right in the middle of those two XXIX logos. It's obviously in the Quebec border, but it's in Rouen-Noranda, and so there's definitely that synergy there where they're both brownfields, and they sent their concentrate, copper concentrate, to the Horn smelter, which is still going and owned by Glencore. And then, of course, we have a dual asset. I think I do believe in scale. Obviously, it's nice to have the potential to share yellow trucks. These two assets will never share yellow trucks, but again, the synergy on the size, scale, and where they send their concentrate is good. But also just to have dual assets eliminates the single asset risk, which is always positive in this industry. Both companies that listing off our shareholders have very, very strong shareholder bases, both institutional, strategic investors, good long-term shareholder base, of course, anchored by our group. This is the Opemiska here. I just to juxtapose everything. I think this just totally gets missed by the market. I think it's an opportunity just waiting to be re-rated, which is the Opemiska. Again, beating that dead horse that it is the highest grade open pit copper deposit in Canada. Look at all the other peers there. And this is just on a copper basis. It's nearly 0.8% copper, pit constrained. And then you can see Thierry right there, which is the other asset owned by Cuprum, will be owned by XXIX, is not too far off in terms of grade. So it's going to have 2 out of the 4 highest grade copper resources in Canada with growth ahead. So it's a pretty serious asset base to start with. People who followed QC Copper, which the company, of course, is still known as, but will, once the merger is closed, will be known as XXIX. The Opemiska, it's a well-known deposit. It's 4 high-grade underground mines, 2 of which we've reinterpreted. You can see on the west side there is the Springer, the Perry. We've turned that into the open pit. That's where you get 100 million tons at about 1% copper equivalent. And of course, you've got the Cook and the Robitaille, which the company will start its drill program this winter, probably November, December. We'll have the drills spinning on the Cook and the Robitaille. We've completed the data compilation, meaning we have an updated model for the Cook and the Robitaille based off its historic production and drilling. And now we have a better understanding. And of course, now we're going to drill it out more systematically and produce a mineral resource estimate on it, with the eye to put out a PEA on the Springer and the Perry in the 2025 year. And obviously, as I said before, it's really the PEAs are nice. It's part of the process, but where the rubber hits the road is the PFS. That's when you can tell a project is real. It's much greater than a desktop study, which a PEA is, but it costs more money, takes more time. Our objective is to finance ourselves right clear to the PFS, and I suspect you'll see us get there in the not too distant future. Now, switching gears here to Thierry. So this is the asset that Cuprum is contributing to the new XXIX. Thierry is very large. It's historically, it is production came from what's called the K1 deposit. The K2 deposit, which is the underground. It's high grade. It's about 1.5% copper. It's open. It's going to grow at the underground aspect. But why we really got excited about the Thierry asset is the K1, which is the open pit deposit, which is about 3 kilometers to the east, right on strike. We think there's the opportunity to grow that. It's open. We had drill results out earlier this year, which I'll flash in a second, but it's open along strike to the east, to the west, and certainly at depth, where we had some really nice intersections showing that particular deposit is getting wider at depth, and the grades seem to be getting better. So it's very interesting. It's has not had much drilling, but that's going to change in 2025. So you just can see the scale there. It's the sizable deposit, a great place to start. We're very happy to be owners of it. As I said before here, this is just sort of outlining the property. It's right in the middle of Pickle Lake, which of course is gold district. Barracks there, Newmont's there, lots of gold deposits. But right in the middle of this district, you get this copper resource, which is unusual, but that's the way it is. You can see there's the underground. I'll show you pictures of that, and this is the K1. And then there's an area in between. The sort of holy grail of this from an exploration standpoint is to connect these two, the K1 and the K2. We believe that's possible. There's certainly geophysics in there to support it. But what this project is just dying for is drilling. And that's exactly what we're going to do and grow it. This is what it looks like. This is the K1 deposit. This is the near surface open pit. We took all of the historic data, Cuprum did, and it harmonized it. It had decades of data from different databases and different operators. And we leveraged our skills that we did at Opemiska in terms of redigitizing or remodeling a million meters of historic drilling. We took that exercise and took that team and applied it to Thierry. And this is the model. You can see it's large, it's wide open. You can see the model there, and there's a number of holes there that just weren't properly modeled when they were drilling this back in decades past. They just weren't looking for the disseminated type of mineralization, so a lot of the holes weren't properly sampled or sampled at all. And so you can see there's this discrepancy here. There's areas of mineralization where it's clearly open, but it just hasn't been modeled. So there's just sort of a difference of interpretation here. And so this whole K1 deposit is wide open. This is what it looks like from the northeast. It's got scale, it's big, it's very consistent. You just drill it, step out to the east and the west, and you just hit these zones. And of course, we drilled underneath it this year. I mean, if you look at the scale, this is really only to about 150 meters. So this is all very shallow. There's lots of potential at depth. And this is the K2, which is where the bulk of the former production came from. This was mined. This area here was mined, but you can see there's this mineralized envelope. It's very large. It's open at depth. Really anything below 500-600 feet, a couple hundred meters is still there and never mind. So it requires more drilling, of course. But what we really want to do is here, I'll show you the connection here. This is the K1, this is the K2, and then there's this nice geophysical trend here that we like. We really want to open this up, and this really could be a game changer if we can connect these two zones somehow. Thierry had some really nice drill results out June 20th. It had some news. You can go to cuprum.ca to see, but those are pretty spectacular drill results here. You know, these are all from surface, more or less. It's almost 200 meters at nearly a percent copper equivalent, and more intersections here. I won't list them all off, but those are all nice wide widths, very nice disseminated mineralization, good grades. Right at surface. This project's very interesting to us, and it's going to grow, and it fits very well within QC Copper's portfolio, which of course will be XXIX. So when we did acquire the Thierry about a year and a half ago within Cuprum, we always had the eye to do it within QC Copper. However, at the time, for purposes of how it was acquired under a distressed situation and where QC Copper at the time, it just wasn't the right time. But now is the time. These assets do belong together. They're analogous in many ways. Of course, they're different. Every deposit's different. Every location is different. But they both sent it to the horn. They both have this infrastructure, historical, a wealth of data, which we just absolutely love, and obviously upside growth potential, both of them. And then we think we can define and develop them. And when I say define, I mean put them in a PEA, put resources, and obviously move towards the PFS, which that's where the project gets defined as real or not. So our development strategy, it's critical that this acquisition is not just about bigger for the sake of getting bigger. It's about having and implementing a dual asset strategy, meaning developing both assets in parallel. They're both at different stages of their life, but both have very clear development plans. For the Opemiska, we're going to be drilling in November on the Cook Robitaille. We are working on our updated, a preliminary economic study on the Springer Perry open pit, which is going to show a mine plan that is not going to move any houses within the town. I think that's a very critical aspect. That's sort of been what people are most concerned about, or the discount associated with the Opemiska is our impacts on the town. Obviously, there's going to be impacts on a town when you're developing a very large open pit, but we've been working with the town and communicating in the local community stakeholders to develop a plan that is minimal impact. And we think we can do that. And that's what we're working on, is showing a plan that's not going to move any houses, at least for the first 13 to 15 years. And that gives us a very robust mine life production profile. And let's face it, anything beyond 15 years in terms of how projects are evaluated in terms of IRR, NPV doesn't move the needle. So we think that's the right approach and strategy, and that's what we're aiming to deliver, and we'll deliver that in 2025, and then shift towards the pre-feasibility. Now, and of course, we expect the resources to grow both on the Cook and the Robotai. In parallel with that, those resources could be developed within a PFS. And then the Thierry. The Thierry is really more about growth. We're going to be growing that, drilling it out in 2025 substantially, focused on the open pit K1 deposit, but also the K2 and defining its underground resources. We want to do some updated metallurgical studies, and then we think we can put a preliminary economic study. The Thierry deposit, I think, has the potential to get much bigger in terms of what we understand, because it's wide open. There's no town constraints at all. Certainly Pickle Lake is in the area, but it's not impacted quite the same way that Opemiska is. So it's got really an awful lot of growth potential to be re-rated, and eventually we'll define that. It's much more easy from a geologic standpoint to drill, and also development standpoint. So what's this all about, this comparables and the XXIX, and why do we think it has upside? Well, I think each of these assets on their own has significant upside, but I think together it's a much more powerful company. We're going to get a lot more eyes on our story, and eyes on our story is an important part of this, because we have momentum. People get talking about us. It certainly also provides a greater opportunity for institutional shareholders. As we get bigger, we draw on a larger pool of investors and a larger pool of capital, and of course strategics. Strategics are a key part of development, and getting them in there to bless these projects is important. We've hosted many site visits, both on Opemiska and even one or two on Thierry recently. So there's lots of strategic interest, and we think if we can bring two assets in Canada, Eastern Canada, with all these infrastructure benefits and size, scale, and grade aspects, we become very attractive. And that's what it's all about. But as we do grow in size, it's important that we develop these assets and de-risk them and show that they have the potential to be mines once again. And that's where the re-rating potential comes. I think the darling of the, call it copper market, base metal market over the last few years has been Foran mining. It's a wonderful story. It looks like a really interesting deposit. It's nearly a $2 billion company, but it wasn't too long ago that it was a 14, 15 cent stock, $20 million market cap, just like QC Copper. And the truth is, its resource really hasn't gotten any bigger. What has happened is that it has been de-risked and better understood, and it has a pre-feasibility study. Why I emphasize the pre-feasibility study is really where the payday comes. And it's had some, as a result, it's attracted significant institutional and strategic investment. And that is our trajectory, and that's where we are going to take XXIX 29 copper. So this is the case study here. I won't belabor it, other than to say that it wasn't, if you just look at the historic resource growth for Foran, it really hasn't changed all that much. And it's been about getting growth, strategic investment, high quality investment, access to capital to develop and publish a pre-feasibility study, which offers a nice IRR. It's 22%. It's not mind-blowing, but it's a healthy IRR. It's in a wonderful jurisdiction, Canada. It's sizable. It's got good grade. All of the things that both Opemiska and Thierry offer. So again, I don't like to compare and contrast, because every situation is different, but I don't think we'd be doing our job if we didn't look at the comparables and try and set the goal of where we want to go. And if you juxtapose XXIX's assets relative to Foran, we're bigger. We've got more contained copper equivalent, and there's all sorts of advantages that we offer in terms of infrastructure. We're much closer to the smelter. We're much closer to the rail. We've got infrastructure. As I said, both these assets, I'd suggest, have unparalleled access to infrastructure and very large, good grade baseline resources to begin to move them both towards the pre-feasibility study. So I think there is a good argument to be made there that we have that sort of potential. And so yeah, so that's what XXIX is. And thank you for paying attention to our story here. We're looking to build a copper platform, a Canadian-based copper platform. We're inspired by past successes like Ross Beaty's Lumina, like FNX. Those built base metal platforms here with excellent assets and just grew from there, caught the wave, and were tremendous successes for those who were operated. Produced metal, which is still in production today, and obviously was a tremendous success for all shareholders involved. This is what QC Copper looks like as of today. This is our team. None of it is possible without all of our team member here, which I'm very proud to work with. And again, XXIX is part of the org group. We're owners, long-term views. Our objective here is to put something in production, and this is our forward-looking statement. And again, my name is Stephen Stewart. I am the chair, founder, and CEO of XXIX, and you can reach me at these contacts here. Thank you for your time.